Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Friday, the Australian dollar staged a course correction in front of the level of 74.20, which I've viewed as a short-term base. Now, from the bullish outside range day has given some concern that the market actually may recover further this week. With the RBA rate decision tomorrow, and it's widely expected they will keep rates on hold at 0.1%, but keep an eye on the statement just in case it comes out a little bit more hawkish, and therefore could see a little bit more bias to this outside range day. Now, a close above 75.40 would confirm the bullish candlestick and maybe put in place a push towards 75.70 with the top side cap around 76.15.30. We have a bullish hammer in place with the euro. Now, it's a little bit concerning to the fact that the US dollar, which measures the greenback strength against a basket of 6 major currencies, posted an outside range day on Friday after the non-farm payrolls numbers come out stronger at 850,000 jobs added last month compared to the forecast of 725,000, with the print topped previously at 583,000 jobs created in May. Now, from the strong number, the market has actually performed somewhat a weaker play to the US dollar and posted an outside range day. Now, with the dollar index closing under 92.05 and it's around 92.30 at the moment, could give further concerns to the bearish case of a weaker play to this week into the US dollar. But keep an eye on this pattern here. At the moment, I see the resistance at 118.80. Now, a break above there would give further strength to this hammer candle and therefore see a push towards 119.65 where I've outlined here. But with the ADX still holding to a negative case and this pattern with the RSI not fully supportive to this candle along with the MACD, may eventually see this pattern dwindle back to a bear case and look down towards 118.10 with the objective still holding at 117.50. The dollar yen rejected that top side after the break of this channel and ended up posting also an outside range day or an engulfing candle, and therefore could see further weakness if we see a close under 110.90, which is exactly where we are now, right on the cuff as we trade there. But the close underneath this level could give some concern down towards 110.40 and reassess. Now, we may see a slightly quiet night as the US is on taking a holiday in observance of Independence Day. So let's see how the US dollar will perform. Nevertheless, some of the patterns are waiting confirmation. I would say that dollar yen does look very likely due to the RSI breaking through the midway point, and we could see the MACD follow a suit and then see the drop back towards this bottom side of this channel, as I mentioned, around 110.40 and reassess from there. Sterling posted a bullish outside range day after reaching the objective of 137.40 last week. From that, a close above 138.55, which is where we are now, will give further indication up towards 138.90, maybe even seeing a push up towards 139.60.80, where I've outlined here. So do keep in mind that the RSI has broken through the midway point, but the MACD hasn't supported it yet, and there's no trend now with the ADX. But the close above 138.55 would initiate the call to the upside and support this outside range day. This leaves sterling yen a little bit mixed after the long-legged doji, but the RSI is attempting to break up, and if the pound does strengthen, then of course we will see a short push up towards 138. Not 138, sorry. We'll see a push up towards 153.80 and with a cap at 154.40. Finishing up with gold, well, the market remained above 1,773 and has maintained for the last 4 days to a slightly positive case. Now, looking at the target at 1,800, figure 6, a close above there would give an extension up towards the region of 1,835. So that would mean we need to keep an eye on the dollar index and see if it does or confirm that bearish outside range day if it closes under on the index at 92.05. Well, the bulls are all dressed up and nowhere to go when we look at oil as it pushes this top side of the range. There is bearish divergence clearly seen here and little indication from the MACD as it flutters attack and therefore could see some mixed play into the coming week. I do feel that with the divergence there, could see the market see a downturn, but we do need a little bit of confirmation to this. And a close under 74.05 should see a further slide towards 71.90. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to the new week.